Hey there, Hector here. I am recording right now the cable, the sterling pound against the American dollar. We are looking into the 1 hour time frame, and I'm going to explain what it seems to be a London Open breakout setup. Okay, still quite a few minutes left for the London Open for the London market to open up. I have a few minutes, so why not recording a video on this setup? All right. Anyway, so like I say, sterling pound against the American dollar, 1 hour time frame. What we've seen as per the last two trading session is a rather healthy move to the downside all the way from the 160.50 area all the way down to the 158.50. All right, so that's a 200, in fact, 220 pip drop as per the last few days. Quite a healthy drop. All right. Previously, before that, we had seen another very healthy move to the upside. Okay, as per the last few weeks, actually few days worth of price action. This happened last week already. But anyway, we certainly have a intra-week downtrend, which is always a number one requirement as far as trading the London Open breakout strategy. You always want to have an intra-week trend in place. Furthermore, I am liking how during the last 7-8 hours or so, at any rate through the Tokyo range, we've seen a rather horizontal price action. Okay, take a look at how I can easily define the Tokyo range by drawing those two horizontal bands. All right, not only price has been moving sideways around the 159.00 wrong number, but moreover the range itself is rather tight. Okay, price has not really been flapping wildly. Instead, it's been moving sideways, hopefully gathering momentum. So once the London volume kicks in, price should accelerate, or hopefully will accelerate, to either direction. Okay, we obviously don't know which direction price is going to break towards, okay, like I say, as the London volume kicks in, but at any rate, it's worth noting that the setup is so far, looking, rather tradable, okay. Moreover, I like how the Tokyo range has taken place at the extreme of the previous day's range. Okay, in fact, it's taken place at the upper 33% of the previous day's range. Okay, which is also another requirement that I like to see as far as trading this specific type of trades. Okay, so again, from a technical point of view, okay, from a setup point of view, the 1 hour time frame is looking rather dandy. Okay, it's looking rather good, and now we just have to wait for the London market to open, like I say, in a few minutes. Let me now show you actually the daily time frame. It is just 1 second. Let me make sure that everything is squeezed in. Anyway, so the reason as to why I want to show you the daily time frame is, well, first of all, because as you know, I always like to take a quick look into the long-term charts, just to make sure that there is no element, no long-term level of support and resistance coming from the daily, coming from the weekly time frame that may, meddle with my intraday trade. Okay, I want to make sure that I have the green lights, okay, the thumbs up from the long-term charts as well. All right, so the reason as of why I'm also liking this setup from a long-term perspective, it's because we've just broken this up. Actually, just 1 second, guys. I'm going to zoom in. I want to make sure that you guys see this. Just 1 second. All right, there we are. So, as I was mentioning before, we've just broken this trend line there. All right. In fact, it's a channel. I can also draw the upper boundary of that upward channel. All right. So, as per the last, let's say maybe, I don't know, 3 weeks, price had been trending up, okay, with a typical zigzagging formation, all right, within this, upward channel, okay, but 2 days ago, more or less, we saw a final breakout to the downside. Okay, final breakout to the downside, and this indicates that we may see a continuation move to the downside. All right, now that we've already broken that that long-term channel to the downside, right? So what I would like to see on this specific setup is a continuation to the downside. Okay, please mind that if we get a breakout, or rather a continuation move today through the London session, like I said, to the upside, we may find resistance up there, all right, with this lower boundary of that upward channel working as resistance. Okay, you guys probably are familiar with this concept. Okay, former price support. All right, this level, this actual trend line working as support, once broken and retested from the other side, it may indeed work as resistance, and therefore from there price may turn down once again. What does that mean? Well, it means that I have long-term resistance just above, all right, 30-40 pips above current market price, and well, that makes me believe, or rather, I don't know if price is going to break to the downside. You never know. But at any rate, it's the only scenario that I am interested in trading today. Okay? Anyway, plan of action, course of action here. Well, as already stated, I'm gonna mark the Tokyo range, and I'd like to see a breakout to the downside. I'm not gonna trade any breakout to the upside. I don't want to go long on the cable today, again, because that that lower band of that daily upward channel should give me resistance at some point there. All right, resistance from this former lower band of that channel, former support, once broken, may work as resistance around there, and therefore if price breaks to the upside, it may find resistance there and bounce once again down from that level. And as I always say, you don't want to buy immediately below resistance. That's not smart. Okay, guys, don't buy against resistance. So that being said, I'm only looking to trade breakouts to the downside. In the other hand, if for whatever reason we see a early breakout to the upside, and then immediately after price comes all the way down again, and from there on I get a breakout pullback continuation pattern to the downside, that's a scenario I'm also looking to trade. Okay, because as you guys know, occasionally in the early hours, actually in the first hour or two of the London session, sometimes we see a little bit of a stop loss hunting, meaning that the market basically breaks towards one side, it triggers all these orders. All right, basically everybody who had been going short should have their stop losses at this area, more or less. Price triggers all those stop losses, and from there it comes down once again. All right, so if I do see that type of pattern, usually say it's a signal that for the rest of the day price is going to continue to the downside. Okay, don't be fooled by those early hour fake breakouts, because that's usually an indication that price is, in fact, like I say, if it breaks to the upside but then immediately after it comes back down, that's usually an indication that price will continue trending down for the rest of the day. All right, anyway, for now on, I'm gonna simply, like I said before, mark the Tokyo boundaries, wait for the London market to kick in, and from there on I will be updating the video. Okay, all right guys, that's all for now. Cheers, bye bye. Alright, quick update on the cable. This is a 15 minutes time frame, and it seems like the breakout is indeed taking place to the downside, which is what I wanted to see. Okay, let me actually zoom in just 1 second, just to make sure you guys see that. There we are. So that's the breakout that's taking place right now. The London market has just opened, and as you can see, momentum is getting into the market. Take a look at that long red bar, meaning acceleration. All right. Anyway, so the breakout is indeed taking place to the downside. I still haven't taken any trade though. Okay, I'm still waiting. As you guys know, I don't trade the initial breakout of the Tokyo range. I require a breakout pullback continuation pattern. Okay, let's see if that actually happens. Hopefully it will happen. But at any rate, I'm gonna be monitoring the sterling pound against the American dollar very closely over the following minutes, just to see if I get an entry point. If I do get my beloved breakout pullback continuation pattern, I'm going to be shooting for. I will probably use a double exit strategy. First one, as usual, I like to set my first target around the immediate next round number. This case, 158.50. Round number there, and then since we have yesterday's low right there, 20 pips below, okay, 25 pips below to be exact, which is also the low for the entire week. That means that we have intra-week resistance in there. That means that I certainly don't want to overstretch my second target, my final target, anywhere below this level. Okay, I'm not gonna be that aggressive with my second target, and therefore what I'm gonna do as usual is I'm going to set my first target just above the round number, again 158.50, and my second target somewhere around here, okay, immediately above hitting that intra-week low, okay, that intra-week support. Seems like price is retracing up again, okay. That's precisely why you don't want to trade the initial breakout, because price sometimes, you know, it just doesn't pull through, right? So you want to wait, you want to confirm the breakout with that breakout pullback continuation pattern. Until that happens, it's waiting time. All right, so what I'm gonna do is I'm gonna pause the video, and as the trade unfolds, or rather as the setup unfolds, we will see if I do indeed get my entry. But at any rate, as usual, whether I get the entry or not, I will update the video and I will let you all know. All right. Okay guys, cheers, bye bye. Hey guys, quick update, just to let you know that I've just triggered my short entry right there. Finally I did get that breakout. One second, let me actually zoom in. As usual, I want to make sure that you guys see my charts rather clear. Alright, so as I was mentioning before, London market acceleration to the downside, pullback to retest, actually almost to retest the low for the Tokyo session. It fell shy for 2 pips really, but at any rate I consider this a valid breakout pullback, and now we're going through the continuation right there, which is where I've triggered my short entry. Well, because it does look like a prototypical breakout pullback continuation pattern, and therefore it seems like a valid trade. All right. Stop loss as usual, just a few pips above the pullback aspect. Okay, this pullback aspect right there, couple of pips, 1 pip above that level, and my first target immediately. Let me squeeze that in. My first target, as I was mentioning before, just a few pips above the immediate next round number right there, just to make sure that I cash out some pips before facing that intraday pivot point, okay, that intraday round number there. Okay, I will cash out some pips in there. I will not trail my stop loss to break even. I won't do that. It's just too close, and any random any random market wiggle could easily trigger my stop loss if I was to trail it down. Okay, so I'm gonna leave my stop loss at its original place, and there, if prices to continue moving to the downside, well, I will exit my trade right there, which, as I was mentioning before, is a few pips above the low for the week, okay, meaning yesterday's low. All right, just 2-3 pips above that level. Okay, that's pretty much all. The risk reward ratio on this trade is not fantastically good. Okay, it just is not, especially on the first portion of the trade. Okay, this is the first portion of the trade. That's my first target, and this is my stop loss. All right, so it's not really that efficient of a trade. So I am really hoping. Okay, I'm really looking forward to see my second my second target to also be hit. If it doesn't, if price comes back down, hits my first target, and from there price reverses up and hits my stop loss, it's gonna be more or less of a scratch trade. In fact, I'm gonna lose like 5 pips. Not a big deal, right? Not a big deal, but at any rate, it's going to be some sort of a scratch trade, a break-even trade. So I don't know. In order for this trade to really be worth my time, my efforts, and obviously, me pulling the trigger, I really want to see both targets being hit. If both targets are hit, then this is going to be a rather worthy trade. If only the first target is hit, and from there, like I said before, price reverses and hits my stop loss level, then, well, I would probably have wasted the entire day. Okay, but at any rate, we will see. We will see what happens. I'm liking again how this breakout to the downside is in agreement with what we saw before on the daily time frame. That's what's giving me confidence on this specific trade, and that's the only reason as of why I've taken this trade, despite the fact, like I say, that the risk-reward ratio is not really that great. It's just because this trade is in agreement with the long-term charts. The breakouts are all taking place towards the downside, okay, towards the same direction, and this makes this setup from a technical point of view, a high quality setup. Okay, anyway guys, I'll keep you updated. Bye bye. Hello guys, final update. As you can see, my final target, actually both targets have been hit, okay, and therefore I'm out of the trade. That was my first target, that was my second target, which has just been hit, and in a rather high momentum. Okay, as usual, the market acceleration is rather prompt as the London volume kicks in, and usually your targets are hit very quickly. Okay, that's the beauty of the London open breakout strategy. Anyway, easy trade. My stop loss has never been challenged. Up on entry, rather fast move to the downside. Again, quick 30 pips as the London volume kicked in, and well, that's always nice to see. Probably we will see now some support now that we are hitting yesterday's low and the intra-week low, so I would not be surprised to see some retracement to the upside. But at any rate, I don't care anymore. I'm out of the trade. I've made a few pips for today, and it's time to move on and search for trading opportunities somewhere else. Cheers. Bye-bye.